I mean, Bitcoin's up off the Fed news. Um, there's some weird stuff going on. I'll be honest. We're gonna get into it today. We're really gonna sit down and deep dive. This is gonna be a lot less bitching and moaning like last week's video. We gotta cover a lot because just as markets are about to get boring, I think this heats up again and it gets really intense, and you do not want to be caught on the wrong side of the table. We're gonna start off with the Bitcoin daily chart. So we're gonna combine this here. If you guys are wondering why I haven't been really doing this and I've been doing it in the videos, is because it makes it so I can go through this in the video and not be complacent. So you can see obviously we've held this and bounced, right? We got single prints up here, a single print here, and yeah, we're gonna target this yearly open again, right where this kind of single print is. This is the last year's open, mind you. There's not much to do. I mean, if you were long from down here, you kind of just stay long. And if you missed it, I mean, this is a good scalp long here, right? This is that's at least a 5-day composite, right? Yeah. So, I mean, you kind of just stay long. Kind of it for the daily. I want to see how this goes because the futures for the SPX are really bad right now, and the Nasdaq. And there was some weird kind of divergence that came out towards the end of the day, even though it made a new all-time high in the SPX. But the profile is weird because in the SPX, the profile basically shows that dealers are net long. They've sold. It's hard to explain. They've sold calls, but let's say news is good, they'll buy the inventory back and push price higher again. We'll get into that in a bit, but I mean, from just Bitcoin right now, it's fine. I mean, from a VWAP perspective, I mean, I guess start targeting the 90-day, right? The 90 days come down quite a bit. We're above the 30-day, which is good. Like it checked in here and actually pushed up from it. Yeah, look at that. Like that was pretty perfect, right? That's it right now. I would start targeting this 90-day, but I'd more or less look for confirmation to get above the previous yearly open. So the 7-day VWAP here, the 7-day rolling VWAP, I mean, we're kind of trying to fight above it right now, right? So it's actually kind of good that we're trying to get above it because we did fall back under it, right? Like you can see it got the retest here before moving lower. Yeah, so I mean, it's whatever. We're going to take a look at the weekly here real quick, and then we're going to get into my largest concerns with this stuff right now. Okay, so let's look here. How to combine this week here, and what are our updated levels? Okay, well, there's your updated levels. So, I mean, as long as you can get a close above the value area high, it's fine. But again, we've kind of not done it. It's good we've stayed above the point of control, don't get me wrong. But I would just be cautious here. Like, just make sure it closes above this and doesn't just wick up and fall back into range. We've been in this composite for so long, like at some point it's got to break. It's just a matter of when, right? Like whether it's to the upside, to the downside. What we're gonna do is we're gonna take a step back. Okay, so let's just look at the weeklies, right? Like the weeklies, real quick here. They've been slowly grinding up, which is good in the short term, right? But we still got to tag this 365, but I want to talk about some other things here. So this is a good thing. My buddy Bronus, however you say it, he posted this on Twitter. It was basically showing this 20-week bar thing where Bitcoin usually goes 20 weeks, tests a high before breaking down, right? Like see it tests a high and then breaks down, tests a high and then breaks down, right? And this plays into the whole 365 200-day VWAP test. Technically, this test would come in the week of February 20th. This gets weird because, so for those of you who don't use Twitter, there was an announcement that came out that basically the administration, or the DOJ rather, it's pretty much the administration, but so basically the DOJ was going to investigate Jerome Powell into God knows what. They're going to look for some criminal charges or something. But to my understanding, this is all about the renovations that they did at the Federal Reserve. And them being over budget, I guess, whatever. But the real truth behind this is they're trying to throw him under the bus, saying that, you know, they want lower rates, he's not doing the right job, he's hurt the country. And they've publicly shamed him before, whatnot. I'm not American. I've been very transparent on this. I'm not politically motivated. I don't care. But I will say this. I think he's done a damn fine job. I think the Fed probably could have cut rates a little bit faster. And one of the reasons I'll talk about that real quick is if we just look at the 2-year yield, what's it been doing, right? It's been pretty much in a downtrend for the last year. And the 2-year is what you want to look for when, the Fed should or shouldn't be cutting rates, right? It tells them what to do. Raise rates when it's up, raise rates when it's moving down. Or sorry, cut rates when it's moving down, pardon me. What we'll do, like you can kind of just see here, like when the Fed has cut rates versus when they've raised it, right? This is just the 2-year overlaid by the interest rate. You can see, like, when it goes down, it means start cutting, right? And then when it starts to shift up, I mean, look, you start raising, right? Yeah, when it starts to point downwards, you start cutting, right? So you get what I'm trying to say, right? So I think the only thing that Powell's really done wrong, or it's not even just him, it's just the Fed, is maybe they could have cut rates faster. But hold on, we're going to get into why this is a problem if they cut too fast. Let's look. We're going to use the 10-year because I think the 30-year is just a lost cause. I can't believe I'm saying that, but I mean, maybe I'm wrong for saying that. I think the 30-year is a lost cause, okay? But we're going to read the 20-year rate here, or we're going to look at the 10-year rate here, okay? What do you guys see every time they've started cutting? Is the yield started to peak up again, right? Do you guys remember at the end of last year when they started cutting really high, right? So like let's take September, right? They were moving down and they did that huge cut. Do you guys remember when Tom Lee went on CNBC and said the market was going to crash and the SPX did a huge like VIX correction? I think it was in August of 2024. Do you guys remember that? Tom Lee went on CNBC saying there's a lot lower to go. And literally it was like the next day or the next week they cut rates and the market just sent upwards, right? But what do we see? So when they cut rates right here, it reversed and the yields spiked up nearly 1.5%, right? If I'm not mistaken, I feel like this actually hit 5 at one point. Apparently not. But this is the problem, is they did aggressive cuts and the yields spiked. And they've done a couple here. They've left it pretty neutral for the last bit, right? But again, they cut here. And I guess it did make a low, but they've cut again, and now it's trying to break higher again. And this is the problem, is you can't cut too aggressively. Listen, guys, markets, when it comes to markets, don't worry about a 25% rate hike or cut. The market, whatever direction it's going in, it's going to price that in and just keep going in whatever direction it is. And in fact, it's probably just going to keep moving higher. When you aggressively start making rate changes like 50 points, 1 point or higher, that's when you're going to start to really see, okay, it's time to pay attention. What is the trend going to be? A 25% cut or a 25-point cut, it's whatever. And the news always makes it a huge thing. Everyone on Twitter goes, rate cut this, watch this week. Guys, whatever the direction is, it's probably going to keep going that direction, realistically, okay? But the problem, like, I don't understand why they're trying to throw this guy out. I would say the markets, while he's been in, have been the highest they've ever been. They've been the most stable. The only thing I really think is the Fed could have probably cut faster. Maybe there could have been some adjustments during the whole COVID timeframe with policy and whatnot. But he himself is not the only economy impacting factor, right? I'll be honest, this gets weird because one of the senators tonight actually released a thing saying they're going to block the DOJ investigation from preventing Powell to be out until it's completed. So what that might do is extend his term into making him still chair for a bit until this whole investigation's done, which would make the new chair be delayed to be put in, which would further push out the rate cutting process, if that makes sense. So they're not going to cut January, and I'll show you why they're not going to cut January. Right? It's a 95% hold, right? They're gonna, at the end of the month when this comes in, it's going to be a 95% hold, right? And we can look at just probabilities here. It honestly looks like they're going to hold for a while. And I said this in a couple of videos ago, I think, but why cut as the chair exiting if there's going to be a new chair coming in who's going to run it hot who might fuck this thing over? And I mean, tariffs like they're deflationary short term, but the long end of them can be inflationary. And my issue with this whole thing of what this mission is trying to do is with gold and silver sending, that is basically calling bullshit on there's probably going to be a reacceleration of inflation at some point. Doesn't mean it's tomorrow, doesn't mean it's next week, doesn't mean it's next month, but I would say pushing into the early 2030s, like 2027, 2028, probably through like 2033, 2034, at some point there's probably going to be a heavy reacceleration of inflation. You can't cut rates too fast because that sends yields soaring, okay? Like the bigger end, like the 10, 30 year, you can't do that. All right. I think the 30 year is just doomed. I really do. I mean, I might be bold for saying it. I think the 30 years cooked. I really do. I don't think there's ever going to be a way to bring it down back to where it was unless there's some huge shift. And if it does go down really fast to like, let's say 3.9, 3.5, I actually think there's a bigger problem in the economy to why that's happening. But regardless, like trying to throw this guy under the bus just by saying, oh, you went over budget on blah, 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 and now you're going to be criminally trialed just to try and get him out faster so he can't be governor when his chair term is up for when, you know, the new chair comes in, whoever that's going to be. I think it's honestly a bad sign. And I think foreign investors are going to get spooked by this because what it shows is, one, if they're trying to force this guy out and get someone in there to act as a sheep for the administration to cut rates faster, that shows that the Fed can't be independent. Number two, cutting interest rates too fast might fuck a lot of things up and create instability in markets and the economy. Number three, overthrowing somebody in the bus like overthrowing someone under the bus like this shows that you have basically a bully in charge. And it's not to say this guy isn't a bully. I mean, you've seen how he's treated other countries, how he's talked with them, how he's talked about people, how he's treated women. You've seen what he's done in other political tensions. But you get this kind of weird instability effect, right? And I shouldn't even call it weird, but you understand what I'm trying to say is if the Fed can't act independently and can't make their own decisions and are forced to bow to the hand, that's not good, right? You should be able to, policymakers should be able to act in their own accord. There's a reason there's numerous people at the Federal Reserve that vote every month on a rate cut decision, on policy needs, whatnot, right? Like, it's not up to one dude. You can't get just a new chair in there and to just run it hot, right? It's not how that works. So, if you want my honest opinion here, while Bitcoin is doing this, right, you can actually see, like, I don't know. I mean, yeah, look when they cut rates. That actually marked that bottom. That's hilarious. But, I mean, you can just take a look here, kind of what Bitcoin does during rate cuts. I would argue it actually gets kind of bearish when you start cutting rates too fast. Like, when you have to cut rates, I mean, where else can we look in history? I mean, yeah, even here when they started to cut rates, it went lower. And yes, I guess when they went sideways, it started lifting. But you can see once they lifted back up here, for example, that's when Bitcoin started to push up. But you can see it's been struggling since they've been cutting to kind of just keep an upwards momentum going. Right now, you're kind of consolidating. We'll talk about that more later. But I don't know. I'm just not sure I like that. Right? Look at this. Like, actually, yeah, when the rate was going higher, Bitcoin pushed higher. That's crazy. And then they started cutting again, and it failed to break out and push lower. I don't know. But regardless, let's stop talking about that right now. But I actually think that the reason Bitcoin is up is not for a bullish narrative. I actually think going up to retest this to confirm the bear market like it usually does. Hold on, where's the 200-day? Sorry. Forgive me. Okay, I gotta sort this quickly. But I'm wondering if it's now just pushing up to do that bear market confirmation. Changes to red just so we can see the difference. Like, I really do wonder if it's just gonna go up now and do this bear market confirmation as if it doesn't like that. It's weird. Like, it's really weird. But again, this gets really odd because historically, like when it does this move, like usually when these cross, that marks a low, right? Like it marks a low, or at least very near it, right? Like when they crossed here, 17K, there's 15K, I mean 2K difference, whatever. But historically, when this metric is crossed like this, it marks a low before pushing up. And it looks like in coming months, it might do that again. And again, like all metrics are broken, right? Like they're not all perfect. This would take time to play out, like realistically, to get this to shift up here. I don't know when that crosses. April. It's probably honestly pointing closer to May. Hard to say. But I don't know. I think honestly the reason it's up is because they're going to do the final kind of push up here and send it. There's a lot of resistance between 94 and 96,000. But if you can get over that, it would just push into it. But I actually don't think this is as bullish as people seem. And a good example of that would just be something like this, you know, where we kind of got a double top and broke down, and we got a failed breakout attempt that trapped a lot of people. We got it here, and then we got it here, right? Like we can look back at 2022, right? All you did was sweep the high and break down, right? But if we look at something, you know, closer to here, it tried to break out but failed. Like it was a big bull trap, and I kind of think that's what's playing out here. I think it's up for the wrong reasons. I think it's up to squeeze some shorts. I think it's up to kind of get everyone to push into this and say, all right, it might be time to go risk off. And we'll talk more about this from the SPX market perspective as well. But I'm just not sure that people are understanding what's going on here, right? We are, let's just see here, from the high here. We are, how many weeks are we at now? Oops, I have this in, hold on here. You know, 10 weeks was honestly that lowest low before breaking up again, right? We had our big low here and then our second low up, and then now we're pushing out. Now we're at the 14th week. I mean, it's possible. Very weird. Very, 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 very weird. I'll be honest, very weird. I'm just not sure. I really don't. This cycle's been so weird. I'll say this, I don't think we're going to a new all-time high. I just don't know if this move this week is going to be that move. What I will say is just looking at pre-market, if this selling continues into this week and the end of, I mean, we have SCOTUS on Wednesday. They ruled the tariffs, or at least give us an insight to what it is. What do we have? We're at CPI, PPI. This will be interesting to see if this runs it hot or not, or like if this gives us a real look at things. Unemployment claims. They might do a government shutdown at the end of the month again. ECE, final GDP next week. Bank of Japan, they're probably going to raise rates again. End of the month, federal funds rate, that'll be a hold. Unemployment claims. PPI again. I don't know. I think just as I was bitching and crying in that last video saying that shit was so boring, it's gotta make its move, I think it's about to get volatile again. I really do. I think it's gonna heat up and a lot of people are gonna get caught off guard by it. Yeah, I mean that's all I can really say about Bitcoin right now. What I will say real quickly is I do also wonder if people are mistaking this for a bullish pattern. I'm going to switch to the daily for this, and I'm going to turn off the fractal. But you see how price bottomed here, and it was kind of like sideways? Like it went up, and then it dropped, right? Like you see what I mean is it went up and it dropped. Man. It's hard to say. It's kind of a bearish pattern. There's a chance for it to be bullish, but the problem is we've lost the 52-week. The reason I'm not bullish is because we lost the 52-week, and historically, whenever you lose that, cycles are done. I guess there's a chance you could go up and reclaim it and push higher, like if you were to do, you know, this, right? But it's not good. And what I'm also wondering is, like, you see how you got this huge wick back here in 2024, and then you consolidated for March through September? I'm wondering if that was your wick here. Like, actually, can I do a shadow forecast? And we'll just, no, we'll go to here. Like, I'm wondering if, you see what I mean? I'm wondering if how do I explain this? Like we're just doing some weird consolidation again. You know what I mean? Where it's just going to consolidate until it figures out which direction it wants to go. It doesn't mean it has to go all the way into October, right? But technically October should be the bottom of the bear market. Looking at the, I mean, yeah, it's tilted up, whatever. Real quick, let's look at M2. It's down, sort of peaking up. The M2's, this indicator's so weird. It's curving down on the weekly, but it's up on the daily. I don't understand. Okay. I'd rather look at the higher time frame. But like I was looking at this for the SPX as well, and it was following pretty closely. Like if we go over to it, let's turn off these VWAPs real quick. Yeah, like the SPX follows this pretty hard, right? See it dipped, and then you kind of got a dip, and then you rose up, now rising up, and it's kind of curving over again. It looks like it wants to move lower. And if Bitcoin truly does front run M2, you'd basically move lower eventually, right? You know, even if you just offset this by 90 days and just compare the stock market to it, right? Like there's your tariff dip before rising higher. You know, I guess so. It would say a March correction. It's hard to say. It's really hard to say, but it also shows that you might get some huge volatility here going into January or into February before peaking higher, right? Remember, these don't follow one-to-one perfectly, right? Like, for example, when it was down here, we're actually going up. But, I mean, what was this? That's March, right? But when was the actual offset here? Yeah. It's hard to say, man. It's hard to say. I don't know. I really don't know. But anyways, speaking of volatility in the SPX, let's go over to it. So this is the SPX, or sorry, this is the core correlation index here, right? What do you guys see here? Okay, like this is pushing into the lowest it's been. Like it's past all these lows now, right? Or at least right at it. But you guys remember the January low here before it reversed? Turn this off. Oh, whoopsies! I don't want to delete it. I'll turn this off here so you can see it. Do you guys see how low it got in January, and then it reversed, and then we got that huge spike lower? This is the lowest it's gone down since, right? I mean, it's equal to the October lows, but the minute this reverses, you're going to get a big drop, and the lower you go with it, usually the drop is more rapid. Like, it's more intense, right? And I've been saying we're probably due for a big VIX spike, and looking at VIX options profile, the VIX is really due. Like, really, really due. And they're the most short they've been on it in forever. But every time they go the most short on it, the VIX does some crazy whipsaw. And the market usually humbles a lot of people. And it's been up only, it's up, what, 18%, I think? Like, the market's up 18% in a year. Would not be surprised if you guys got some weird sweep lower. And again, we're waiting for Japan ETFs to sell as well. I think we're going to get some crazy news headlines this week. I really do. Yeah, not to get too political, but I mean, there's just lots of geopolitical tensions on the table. So, I mean, we're due for a vol spike. You know, the SPX is up, I will say. It's been up, but I mean, guys, I don't think this thing's got much left in it. There's not much capital on the sidelines to deploy. I mean, if you want to call this bullish, by all means. Yeah, like it is up, don't get me wrong. Even off this recent high here, I mean, you closed above it, right? Like that was the high before versus the new high. So hard to say. I just, the only thing I'm worried about is if you get some look above and fail, right? We've talked about this before, but 6,900 is the line in the sand, right? Like if where's 6,900 here? Actually, no, we can go here and go 6,900. Draw a horizontal line, right? The only thing I'm worried about is if this is just some look above and fail. I mean, you got the retest off and pushed higher. But I would not want to see this stall out. Like, I'd like to see this, brigade bolt and just keep going, right? But I've said this before. The JP Morgan collar strike, which we'll actually look at. So the JP Morgan collar strike's at 71.55, right? I would be. It's just weird they striked it this low, like while price wasn't that far away. It's almost like they striked it that low because they're like, listen guys, there's not much more in this, and they're just like, it's almost like a bait. I mean, it was quarter 2 or quarter 3, the market just ripped through it. But it's really weird that we've stalled out near the highs and they striked it this low, and there's a lot of net dealer short from 71 to 7,300. I've discussed that before. I just I don't know. I don't know. Like, this is our previous high here, and I guess what we can do is we can start a VWAP from the all-time high. It's not going to show us anything today, but I wouldn't want to accept back below, and I sure as hell wouldn't want to accept back into this green range here. I don't know. Like, I really don't have any trade setups to share on this. You kind of just got to let it do its thing. If you're long, stay long, but if you want to start covering shorts, I mean, I've been covering shorts the whole time we push through this, and I'll continue to do so just because I know volatility is coming. Like that's what I'm best at, is spotting divergence and spotting volatility. I'm not looking at exactly what price I think it's going to stall at, because that's how you get wrecked, right? You pretty much buy markets until there's a break of structure or there's a loss of a important zone, right? Like that's it. The easiest thing to do is just buy up. And I know that sounds generic as hell and kind of overly bullish. But as bearish as I've been, the easiest way to make money in markets is just to buy until it doesn't work. But that's options, whatever. But you take profits when you start seeing those exhaustion and overheated signals, right? I don't really have a price target. The top could be in. I don't like calling tops. The only top I've ever called that was easy to call was this one. This was like the most pinnacle peak, easiest top to call in the world. Where Bitcoin diverged a month before, and it marked a top. The inaugural induction was like that, marked a top. And you had a rising wedge here. You had options positioning showing lower. The VIX was ready to spike. 50 cent was like, it was just like, that was the only top I can confidently call that was like super easy to spot. Bitcoin tops are way easier to call because there's more market metrics you can work with. There's a lot for the SPX, but the SPX acts a lot irrational, or at least acts more rational longer than most people can like withstand. But like, as for this, I mean, from a price point, I'll be honest, I don't know. It could be in. It could push to 71 to 7,300 first. I don't know. But I just know that volatility is very close to coming, and it will happen in quarter 1, regardless if people like it or not. You just have to. It's one of those things where you just have to wait and see. As boring as that sounds, the only thing I can kind of say is CSEO is the highest it's ever been in the last 2 years. And every time it gets to this heated level, that usually marks a correction, right? And we'll go down here and look, but look, that was correction. That was a baby one. A baby one here. Baby one here. Quite a good one here. Actually, what was 46 to 41? 500-point drop. Yeah, like that's it. Like it hit this overheated line. It bowed back from when the market pulled back end of day. But where was it? There it was. So see how CSEO hit the top of the line here before pulling back? So this was when the SPX hit 69.74. You can see here, right? And it actually perked up and hit it before it sold off 10 points at the end of the day and pulled back. That's not good, right? And CSEO, it's not just a moving average indicator, right? Like if we go and actually read about how it works, I'll let you guys pause the video and read here. But it does take a bit of a moving average, but it uses a bit more internal metrics as well. It's closed source, so I can't share that with you guys. It's a very good indicator, very good. It marks a lot of lows, it marks a lot of highs. But there's more reasons to why we're near top. Like again, I wish I had a trade set up to share with you guys, and I guess I'll just look at TPO quickly on it. But there's just not much to say. I mean, there is this single print down here to fill. That would not be good to oh. Just not much to say. Like it made a high. I guess actually I can sort of combine this one. Right? But I mean, if we're down, technically right now, as of speaking, the futures are pointing that we'd open at 69.42, which would pretty much be at this level, like a little bit under it, I guess. I'd have to see how the profile opens on Monday to make kind of a calculated decision, but I just know we're so close to peak exhaustion. Being this low in pre-market's not good. It can always change, right? But again, like U.S. capital flows, they can't buy much more. There's not much more liquidity left on the sidelines. I don't know why Tom Lee's saying there's a lot more to be deployed. I don't know where he's getting this from. There's not much more to deploy. And again, we're showing overheated metrics. I'm not worried about price. I'm worried about when this correction happens and how far it goes. And I'll be honest, if you lose 6,700, it gets really bad. 6,400 was kind of the strike last year to pay attention to. If you lost that, and sure enough, we bounced it. What was it? I think it was 60. I think it was 65 something. What was the low? Yeah, it was 65.22. So we got kind of bailed out there. But now the slip risk is 6,700. And we're not really close. Like, we're not far away from it. We're not. It's not like we are far away from it. That's what I'm trying to say. Sorry. We're actually fairly close to it. Regardless if price is up or not. I mean, it's 300-point move away. That's nothing. That could be a day's worth of XPX trading for God knows, right? And then like you start entering negative gamma territory right below 6,900. So when you think about negative gamma, don't necessarily be scared by it, but pay attention to it, right? Negative gamma, you can actually get some crazy bullish reversals in it because negative gamma, the selling through it is increased, but the buying through it's also increased, right? You kind of have to just look at if you're getting some weird kind of Vanna sell-off or buying, or if you're getting a true sell-off or what. You really have to pay attention to where Vanna and Vega is cheap versus when it's expensive, and that overtakes Gamma, right? Gamma is kind of your reality, but the Vanna part of it is kind of what's happening in the moment, if that makes sense. So what I'm trying to say is accelerated selling. Let's say we lose the slip risk at 6,900, right? There's a chance for it to really, really go fast. And when you lose 6,700, it just further increases. I wish I had the profile to show you guys. I don't right now. I'll post an updated version of it on Twitter or soon. I just need this Monday to open, and I kind of want to see what happens after this OpEx. There's just not much to share right now, and I don't have access to it at the moment. But just be aware that if you lose 6,900 and you slip right down to 6,700 and it bolts through that, the reaction is not going to be fun. And something interesting is they actually kind of failed to fill the single print down here at 67.20. They tapped it, but it did not get filled. You can see it's still extended out here, right? So, listen, I don't want to be that guy, and I know everyone hates a gay bear, right? But the reality is, guys, you can only be so bullish in a manipulated market for so long before reality sets in. And I think things are about to take a shift here very, 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 very soon. I don't have an exact date or an exact price. I'd watch the dates of Jan 23rd into February 23rd. February 26th, we'll call it. Is February 26th a Friday? February 26th is a Thursday. Okay, let's go February 23rd to January 23rd. Because that is a Friday for January and a Monday for February. Okay, let's focus on those dates where markets are probably going to finish their final move between those periods. In my opinion, especially for Bitcoin. Okay, that's really it. I don't have much to say. I wish I had a longer video for you guys. The Nasdaq is just, I don't know. You really got to break through this. You really got to break through this, and it's just been rejecting. So I don't know. I think tech has been weak, and I think tech has been weak rightfully so. I think in the future, if you get a correction, you build XLE and XLF financials. I made a really long Twitter post about this the other day as to why. I would read through this. I would read through this whole thread here I posted on Jan 10th, and I would read this part here about why I think XLE and XLF. Where did I post it? Yeah, like fuck healthcare insurance, BOW and pharma's fine, banks are fine. Like I'd probably start looking at building XLF and XLE positions when you get the chance. Don't just full port it, right? Don't be naive. But I think that would be smart to look for, because even if the AI trade, which tech is showing, is slowed down, as long as OpenAI doesn't fail and a bunch of these companies don't default, and AI is still beneficial, and we actually build the power grid and expand energy and whatnot, and get these AI and tech companies actually plugged in, I think the trade persists. I don't think it's next year, but I would say like 2030, like late 2020s to early 2030s. I actually think that trade could be very beneficial. I think energy and tech does fine. Yeah, I would probably avoid the majority of healthcare stuff right now, like healthcare insurance. Like that trade is pretty dead. Bio and pharma is fine. I think AI actually helps with some of that. Yeah, I don't know. I would just be really, really cautious, guys. I would just be cautious. That's all I can say. And I know like there's not much for me to show, like in terms of demonstration. There really is nothing to do other than sit on your shorts or sit on your longs or start building shorts and start taking profits. I'll say this: if you haven't taken profits already, you are fucking out of your mind. But the Nasdaq is so goddamn overheated, it's not even funny. Like even I don't trust RSI, but even RSI is like, this thing fucking sucks, right? And I've seen a lot of people posting the triangle and pentagon patterns where this should technically break out as a bullish pattern, but patterns don't work, right? The lines don't mean anything. You have to look at market analytics and metrics and oscillators to really gauge what's going on and what's going to happen, right? We'll see how the overnight Asia session does. And so far, looks like it's up. It's kind of surprising, but we'll see how that does. But I don't know. Maybe the Asia markets do well and the U.S. markets start to take a hit. Who knows? I will say this real quick here. Oil perking back up again, which is weird. Gold, kind of interesting. I mean, the whole real estate interest rate on credit card change was kind of weird. I'm very curious to see how banks are going to, like financial sector, are going to respond to that. I'm also curious that financials, they report this week. So JP Morgan's Tuesday. I think all the other ones are on Wednesday. And then TSMC, that's one to watch. Is it Thursday or Friday? TSMC will give you a very good insight on how that reacts to how probably Nvidia and whatnot does in February when they report. If the TSMC gets a bearish reaction, you probably know that there is probably going to be a bit more bearish selling going into February and March, right? But the bank ones are the ones to watch because the XLF has really been carrying this whole uptrend while tech has lagged. Okay. Yeah, I don't know. That's all I can really say. I guess I'll check in Wednesday and just do some quick charting for you guys. But gold and silver just absolutely ripping, calling bullshit on a lot of stuff. The China silver export ban, people thought it was going to be bearish. I knew it was going to be bullish. People need silver, electronics need silver, and I think it just increases the demand for it. And again, I think the inflationary issue of why this is probably front running that move, I think is going to show up in due time. Right? But wow, EUG even just dropped another 5 points in the futures here. Jesus. We'll see where we open up. We'll see how tomorrow reacts. I'm very curious to see how the first 3 days of the week go. That's for sure. I don't know. Sectors Friday were all pretty green besides the XLV. And what is that? That's healthcare, right? XLV. Yeah. So I don't know. I just keep a fucking hawk on your shoulder, guys. Just be careful navigating these markets. They're not friendly, and I think a lot of people are gonna get humbled very soon. Personally, I don't know. We'll see. But anyways, that's enough from me. I love you guys. Take care, and we'll see you on the flip side.